Moving on, despite one of the biggest disruptions to global energy markets, OPEC is standing by its oil demand forecast. Speaking at the St. Petersburg International Economic Forum, OPEC Secretary said the organization continues to expect global oil demand to grow by 1.2 million barrels per day this year. According to OPEC, there is still no evidence of a meaningful decline in consumption despite concerns about slowing growth.
Despite all the commentary out there that oil demand is declining, we have not registered signs of that yet on the ground that are significant enough to make us change our forecast at this stage. We still see robust demand growth at 1.2 million barrels a day for this year.
The Iran war has caused significant damage to oil infrastructure across the Gulf and led to the effective closure of the Strait of Hormuz, one of the world's most critical energy shipping routes. The disruption is raising fears of supply shortages and renewed inflationary pressures across major economies. However, OPEC argues that short-term geopolitical shocks should not alter long-term investment plans.
It means that we need to continue to invest in this industry. And investments should not be affected by a one-off event that happens anywhere in the world. This is an industry with a long lead time, requiring well ahead of time planning, financing, investments, and means that we need to invest well ahead of time to be prepared for the demand that we see in the future.
While OPEC remains optimistic, Russia is striking a more cautious tone. Russian Deputy Prime Minister said that uncertainty around global oil demand has increased significantly, making future consumption trends harder to predict.
We discussed today with our colleagues. We just had a meeting with His Royal Highness Prince Abdulaziz bin Salman, and we came to the conclusion that no one really knows what to expect regarding demand at the moment. In other words, uncertainty has increased multiple times. The uncertainties not only in the energy sector, but within entire economy.
The differing views highlight the central question facing energy markets today: whether resilient demand can outweigh the economic uncertainty created by geopolitical conflict, supply disruptions, and slowing global growth.